And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. And this, of course, is the show where we bring you where the action is in the broader markets. Another choppy period. We are going to go ahead and take a look at where the broader markets closed for the week. There are some very relevant key areas that you're going to want to be aware of. And then beyond that, of course, we will dig in deeper. What happened relative to sector rotation, maybe not, sub-industry groupings, what is driving these markets at this current time. Before that, I'm going to share with you some of the more impactful headline news that drove price action last week. And first up, front and center was the Federal Reserve's FOMC meeting. Took place on Wednesday, all eyes on that interest rate hike percent and Fed Chair Powell's comments. So we did get 0.25% rate hike. No surprise there. That was very much built into the markets. Interestingly, Fed Chair Powell did comment on future rate hikes. They did pause any future rate hikes at this point in time. But most important was the fact that he softened his language relative to the possibility of raising rates down the road. Most importantly, of course, continued fractures in the banking industry. We also did see U.S. job openings fall to a 2-year low, and that was initially viewed as positive. That was earlier in the week. However, on Wednesday, private sector employment jumped to a 9-month high, and many of you may know the Fed is all about getting that employment number down so that we have reduced spending and hence reduced inflation. We did see service sector continue to grow. That's been a more recent phenomenon over the last 6-8 months. Manufacturing activity, however, did remain flat. So a little mix there. But on Friday, we did see the April jobs report, and it did show a very strong increase while wages rose sharply, not what the Federal Reserve wants to see. Surprisingly, the markets did rally. That was released today on Friday, and we'll talk about why. And next week, a very important period yet again, because Fed Chair Powell did also say he's going to take very much into account these data points to decide where their interest rate movement may or may not take place. So next week, we do get core consumer price index on Wednesday, and then core producer price index on Thursday. Both of these are very critical inflation data. I will tell you the Federal Reserve is much more tuned into that PCE, producer price number, and that's going to come out on Thursday. So that is the headline news from here. Let's go ahead and take a look at those broader markets and see where we close for the week. And here we are with that daily price chart of the S&P 500. A couple of key elements I want to share with you here is the fact that we remain in this range-bound period here. So up on the upside here, as it relates to upside resistance, that 4,200 level still remains. We are on the lookout for at some point in time a move above that 4,200 level, but a sustained move that would indicate further near-term upside. To the downside, the key area here is this red 50-day simple moving average. We want the S&P 500 to find support above that. A break below that 50-day on any kind of volume would not be good, again, for that near-term view. Let's take a look at the momentum indicators. The RSI is back above 50, heading upward. The stochastics, however, are in negative territory. These are a faster moving momentum. So you can see that we do have mixed in the way of momentum indicators. However, the close above the 10 and 21-day simple moving average is constructive. So net, pretty good. I'm going to be doing a lot more in the way of a deep dive for this week's MEM Edge report to dig further. But at the end, we are in generally positive territory, but still rather trapped. And you can see just how dicey last week's price action was. So from here, I am going to share with you and take a close look at where we are with this S&P 500. It is going to have those heavier weighted FANG names and other big names that are going to really potentially move this view. But from here, I'm going to share with you an equal weighted view of the S&P 500. And this is where every name in the S&P 500, of course, is going to be equal weighted. Bit of a different picture. We can see that it is still below key moving averages. Today's nice 1.8% rally, certainly healthy, but at the end of the day, we're not getting that truly broad-based rally. But today, again, we did see a lot of areas participating in today's upside price action. If we can get a continuation there, get this equal weighted S&P up and running, that would be fantastic. So from here, let's take a look at these underlying 11 sectors in the S&P 500. I have a 2-month daily price chart view, that relative strength indicator, sorting it descending order. So up here at the forefront, I'm telling you, these staples stocks are just not quitting. They are in an uptrend. We had a pullback in line with the broader markets and then a significant or a nice rally. It didn't outperform today, but staples continue to be up here in the forefront. And a lot of this has to do with some of these bigger names coming in with strong earnings. They've been able to raise their pricing during this inflationary period due to loyalty. Sales are still coming in. So from here, this is what I like to see, technology up here in the forefront. It was, I will tell you, the top performer, but by that I mean it was up 0.3% for the week relative to the S&P down almost 1%. So the technology sector remains elevated up here, poised to break out of this nice base. Positive momentum as we move forward. I'll share with you some of the more impactful or the names in this group that are really helping support the tech group being up here in the forefront. Let's go ahead and take a look at some of these other areas. Healthcare, this is an area that I have been favoring, particularly the growth area. And I'll also share with you another area that really sprung to life within healthcare this week, which is encouraging. Net, we are seeing still positive momentum with XLV and above 50 on that MACD and RSI. Nice vibrant areas in this, because what I like about it is there are growth components to healthcare, which I favor. These stocks will move faster, but also they have that defensive nature in the sense that these medical products and systems, they will still need to be purchased despite any potential recession, which the Federal Reserve is kind of pricing into the markets later this year, a little bit of a recession. So let's move on from here. Take a look at some of these other groups. XLY up here in the forefront. Oftentimes these days we can see this consumer discretionary back and fill. It is going to be economically sensitive. But when I see the rally, oftentimes quite simply, it is going to be a move in Tesla or Amazon, and then smattering of names beneath that. As we move forward, you want to be aware of those underperformers, and energy, worst performer, down almost 6% for the week. Really fell out of bed here. All about oil prices down 10%. They're at $72 a barrel. So that's not going to support any kind of a sustained move in many of these energy names. Let's take a look at financials. Big gainer today, up 2.5%, but at the end of the day, net still very much in a downtrend, still struggling. So with that, I did mention why the markets rallied today despite strong employment numbers, and it's all about a receding, or certainly today, of the bank related crises, the fear, and then earnings related as well, as we did see Apple come in with good numbers and post a very sharp rally today. So let's go ahead and drill down further, take a look at some of these ETFs that are really powerful and helpful in forming your, certainly my, decision about the broader markets, and it's all about really executing or realizing where that strength is in the broader markets and taking advantage of that. So that same 2-month daily price chart view, RSI, relative strength, and again, that relative strength is going to be very slow moving. It's not going to be dependent on just 1 week's price action. So this type of movement, if you're looking for rotation with this view, it will be not sporadic and choppy. It is going to be more measured. So I really value this. Hope you do as well. You can put that in the comments below if you'd like. Let's take a look here at gold, which pulled back today with that fear receding relative to those banks. But overall, it had a very good week. And we did see this nice base breakout. Those of you that are gold bugs, we did see this MACD black line up through the red, indicating that this period of consolidation has entered an uptrend. So we'll see if we can see a continuation rally into next week, but really a pullback was warranted given this midweek rally. Pulled back right to those key moving averages. From here, we can move along, and I talked about healthcare moving to the forefront, or actually flat for the week relative to the S&P down 1%. This is one of the reasons. This is the biotech ETF. IBB, and we can see this nice rally taking place here, and it's all about these innovative companies either moving closer to FDA approval, merger activity taking place among biotechs. From here, I'll just share one of the better names in that biotech space, and this will be a heavier weighting. This is Biogen, came out with numbers back here, nice uptrending rally shaping up. So as we move forward, let's take a look at some of these areas that were a little bit weaker. Software still struggling. This is an area that's going to be really sensitive to any thoughts of a recession. These corporations, as if we were to move into a period of economic slowness, they will pull back in their software spending. So we are seeing that it is waffling a bit here. A couple of bright spots. It's a pretty big group, but net, it is going to be a little bouncy here until we get a little more information as we move through this period of highlighted economic data. Semiconductor stocks, they actually were up for the week. And this is what I've been on the lookout for with these semis, higher lows taking shape, the momentum potentially shifting into positive territory. We're not quite there yet, but if we can get moving, this is what I'm going to be looking to take advantage of, because when these stocks do get moving, it can be quite impactful. A couple of good earnings reports last week helping to propel that group higher. And also one other area that I did want to share with you was banking, because it was up 6% today. And we can see it really did get into an oversold position. Many of you in the past, I've talked about bottom fishing, and back here I did suggest that it's going to take quite some time before we see an overall resumption of any kind of an uptrend within these banking stocks. So I am not a buyer on the dip unless you are super focused on intraday trading. That might make sense. So that's it for those sub industry groupings. From here, one other chart I did want to share with you, and then we'll drill down from there, is a view of an ETF that's pretty closely aligned with those mega cap FANG stocks. It's a smaller ETF. You can see how volatile it is, but it is called the Pacer Trendpilot 100 ETF. And over 50% of the holdings in this ETF are comprised of Microsoft, Amazon, those FANG names. So it is probably the most highly relevant. But more importantly, what I wanted to point out was this move back into those FANG stocks that really never fell out of bed, unlike some of those other areas within technology. Another item that I wanted to share with you was a ETF that fared very well today. Now, I'm not in any way suggesting that you go and load up on it, but it is ARK Innovative ETF, ARKK, sharp 4.8% rally. And from here, I like to see, well, where is the outperformance? What are the top holdings in this ETF that are driving this RSI to potentially turn positive? MACD, a potential black line up through the red. So let's just take a look at some of those bigger holdings. It will be news related and earnings. Tesla having a nice rally today, up 5.5% on news from their China activity, and we can see poised to turn positive. This is a very, very closely watched stock. I do a lot of work with live trading rooms, and this name comes up often as one to keep an eye on, because when it does get moving, you want to be in front of that train. So here we are with that MACD potentially poised to turn, RSI poised to turn positive, but we do have speed bumps here over the near term for Tesla. Another big holding of that ARK Innovative Fund is Roku. And this is what we saw today as it relates to your biggest movers. Were by and large these down and out names oversold, experiencing these bounces, not anything I would play. I'm more about getting the momentum of these new names that are above key moving averages and in more of an uptrend. Coinbase, another big holding of that ARKK, big gap up 18%. Pretty heavy volume, but it momentum potentially shifting positive. One last name came out with numbers yesterday and really on the move. This is Shopify, SHOP. Last week I did in my show a big piece, I believe, about this gap up on volume and how it oftentimes can lead to further upside. So this, of course, is a retail software, retail platform, very widely used, came out with good numbers, management guided higher. They're also cutting staff and they sold a subsidiary firm. So a lot that the investors saw that they liked. Let's take a look at another ETF, and I'm pointing this out because I think it really signifies what we saw today as far as those names that were up the most. This is Moonshot Innovators ETF, and you can see just down and out. It was up about 3% on the day. I'll just share a couple of their heaviest holdings, and I think it will exemplify what we saw today as far as moves on some of these down and out names. This is Squarespace, and we can see a 4.8%, another top holding in that Moon ETF. That is not a great looking one, but we can look at AI as a, for instance, up 4.4%. So the heaviest weighted names in that ETF are indeed down and out. And I would tell you, having screened the markets today, that is what was evident as it relates to those stocks up 3%, 4%, and 5%. From here, we can talk about the potential of bottom fishing after stocks come out with good numbers, because while we're looking at the broader markets feeling pretty elevated, there are a number of stocks beneath the surface that have sold off quite a bit, 50, 40, 50% or more. And this is one of them, Papa John's, PZZA. They did come out with earnings. However, they were below estimates. And what I'm pointing out to you with this exercise is, when is it time to enter names that are down and out and are potentially turning? First up, I will need to see it break back above that 50. I will need to see both momentum indicators enter positive territory, but equally and even more important is I will want to see earnings above estimates and management guiding higher, which in turn will bring investors. Here's Datadog, DDOG. They came out with numbers earlier this week. The company, their earnings were above estimates, their revenues rose, and they are also talked about getting any number of large corporations that they are securing as clients, as this remote working theme is still very much in place. Their cloud-based service is needed. So let's take a look at the possibility of this being the beginning of a downtrend reversal. Super strong rally on earnings, continuation rally that fizzled into the close, but I will need to see the stock break back above this 200-day simple moving average, very ominous barrier there. We do have the momentum shifting into positive territory, but again, this bottom fishing is not normally my way of getting in front of stocks. I'm just pointing out some of these names that have had extensive moves, not only on strong earnings. Wayfair also reducing their staff, came in above estimates, and they announced that this current quarter, they will finally turn profitable. So we can see this continuation move, again, potential upside resistance there. One last name, and these names that I'm highlighting are names that have been really had their glory days. Actually, I want to get into a weekly chart and highlight that just how down and out they are, and they are potentially turning at this point in time. This is BILL, a big winner out of that 2020 bear. They do back office administrative work for smaller companies, and we can see that it did have a big gap up, but again, a lot in the way of overhead potential resistance. So from here, I'm going to also share with you a base formation, or actually a response to earnings that has occurred here rather frequently, and it is occurring despite numbers that are coming in strongly. So from here, let's take a look at a company that came out. This is Cardinal Healthcare, and I talked about healthcare stocks. This is a daily price chart that have been generally quite constructive. This would be among those names, but take a look. The initial response to the company's strong earnings was a pullback below that 21-day simple moving average, pretty heavy volume, but the stock did find support and closed in the upper reaches of its trading range. Now, what we can do from here is I'll go ahead and share an intraday chart to drill down a little bit further. A 15-minute would be fine. So here we are with that initial pullback on the earnings, and then we can see that the stock, as yesterday progressed. Now, this pullback was in line with the broader markets. Buyers did come in, support the stock so that it closed yesterday, Thursday, in the upper portion of its trading range. The point here is that it's very bullish behavior when buyers come in, and you can see that high volume push so that it closes in the upper range. And then we saw a nice continuation rally of 3% today. So another example of a stock. So if you see these companies that are pulling back despite fairly good numbers, you will want to keep an eye on it. This is Floor and Decor. It's actually a Warren Buffett holding of all things, but take a look. Totally fell out of bed today, down at one point almost 8%, but we can see buyers coming in on that dip, potentially feeling that the selling was oversold. From here, we're going to take a quick look at that 15-minute and see, here we are with that gap down today, rally. Now, what I don't like is this bar here into the close on heavy volume. So this is going to be less certain because we're also not seeing that RSI getting into positive territory as it relates to, very quickly, CAH. If you're looking for a potential continuation rally, this is the move into the close yesterday, quite a bit more constructive. So FND, in my book, upon closer examination, would not be a candidate for a continuation rally at this time. So from here, I'm going to share with you some names that sold off a little bit, not as much as we've seen elsewhere in the markets. This is Visa. So I'm viewing these as high quality names that sold off with the markets and are potentially regaining their uptrend. This is Visa, came out with great numbers. Actually, among these, I will tell you, Mastercard is the better name. It pulled back even less, found support above these key moving averages, and its momentum in positive territory. Now, this is going to be much more attractive to me because we are also coming out of a nice lengthy base, and we're getting nice volume on those rally days. Also wanted to point out to you two stocks that I talked about last Friday. I think I highlighted only about 3 names that were due to report this week to keep an eye on, and they did come in with strong numbers and gapped up. This is Ferrari, RACE, nice gap up into a base breakout and a continuation rally. Another name that I highlighted to keep an eye on is Uber, because what we saw going into earnings was a bit of a rally. So here we are with a gap up into a base breakout. I'm just going to take a minute here and mark this up because it is quite bullish behavior as it relates to that nice downtrend reversal, breaks above these key moving averages in line with your momentum turning positive. And then we subsequently move into a base breakout, all occurring on high volume. I'm on the lookout for further upside price action with Uber. And we can certainly compare that to Lyft, which really did not get any lift. It was down, I believe, about 18% today following earnings. So certainly we have a winner among these car service companies that are doing really quite well. Last up here, I am going to share with you some names that buying on a pullback relative to not, or actually, I think I'll pivot here to share with you some turnaround. Most of the names I'm looking at and sharing with you are companies that have already reported earnings. So you have that earnings unknown behind you. So first up here is Johnson Controls, JCI. This is that concept of that downtrend reversal as the stock breaks above each of these moving averages. We have positive momentum shaping up here, and then that candle formation, we can very quickly go into that intraday and it will confirm the fact that we had this gap up and it ended at the close in the upper reaches of its trading range, which is quite constructive. And then one other name that we can take a look at is Host Hotels, another downtrend reversal, breaking above these moving averages, your momentum entering into positive territory. And that's it for this week. I want to thank you for joining me. And as always, if you like what you've seen, go ahead and hit that like button. And any questions that you might have, I will go ahead and review and answer them. Any areas that you'd like to see reviewed next week, I'd be happy to do that as well. Everyone have a great weekend. I'll see you here again next Friday.